let's get right into the market. Right now, market recover a little from yesterday. We have the US 10 years Treasury over 5% yesterday, and that really put a damper on the market. Right now, I'm looking at slight up recover. This is earning report. The thing is, today we're going to have a lot of numbers coming in actuality. Yeah, we have analyst call, Apple, Nvidia, Amazon, Tesla. Oh, that's that analyst call. But we can see from the chart, okay, just slightly up, but still inside day compared to yesterday. Inside yesterday, high and low. Today it's just a small tiny speck. Nothing's really going on. Just open up a little. Right? So we're waiting this week's earnings. We're earning this week for Apple. We have Apple that's going to coming up on actually next week. But today we're gonna have a Google. So that's one of the big one of the big magnificent seven. Meta today. Actually, Meta is on Wednesday. Meta reporting in tomorrow. Well, Tesla already reported we got this situation. It broke a gap down, and it went right through 200 days moving average, and then there's a technical level here that go way back on this peak, and it gave us a doji star, and then rebound, retrace a little. I'm looking for if it's continue to move back up, and then potentially if I see a hammer, or if I see selling pressure, that will trigger a trade. That will trigger a short size trade. Waiting confirmation again. Amazon will report on Thursday. Yeah, so of the Magnificent Seven, Oracle already reported in. Netflix, better than expected. So it's running up. Came back from this drop, got back down. So that was the previous low before this drop, and it gapped right through it. So this becomes support right now. Very clear that this is the support we're gonna see now, and that's the support line. Came back above the 200 days moving average. Microsoft is just earnings coming up too today. So Google and Microsoft today. We see Oracle. Nothing yet. Oracle. Nvidia. I should move the video up one spot. Right here. So 1, 2, 3, 4, 5, 6, 7, 8. Yeah. Nvidia is holding up well. It's on this trend line, holding on this trend line, and this is also a triple bottom support too. So this is area that's going to bounce, and if anything, this guy would have figured what's going on. I want to go on a video, and the only chance the stock that's doing really well is not keeping up and ripping up is when the market is down, bring the whole thing down, but it's still holding this level. So this is a level to consider going long in actuality. Let's move this line to this area. Right. So this, and if it breaks below that, that's the exit. This is that long area. It's also have this intersecting line in a sense. Very subjective time when you draw this line. You got to be very careful how you utilize them. Overall, it's still on this channel, on a regression channel since the gap Okay, let's expand our regression channel to the latest data. Right, so inside this channel, but this channel is not really steep. Right. Yes, well, I can compress it, but yes, you can tell the angle is very slight. So there is selling pressure. There is selling pressure, and we have this. The problem is, again, our MACD is given a divergent situation. So every time we try to make new high, sales comes in, and there's a lot of pressure selling every time on this. What would be nice is for it to clear this peak. Yeah, you eventually clear this one and this one and that one though. So it's something substantial in that sense. But we're setting up. It's a setup. Again, we're looking for setup. Histogram is red in that sense. Yeah. So the big seven, we have two heavy reporting in this today, right? And we have Meta also this week. Yeah. So it's going to be really something to keep an eye out and see what are these big seven doing. But the big picture is yeah, Spider is under 200 days moving average. It's not really that positive. The problem is the big picture. So Dow Jones are below 200 days moving average. Spider is right there. Right? 2 out of 3 of the big major indexes is floating at 200 days moving. One's below, one's above, one's right there. So it's pretty neutral in that sense. I don't have a bullish border market behind me. That's the problem. Yeah. So I have to, yeah, even stocks are at 200 days moving average. It is just right this level. The latest news of the macro environment is that the market is going to break further down in that sense. And actually, it makes sense to me. I would like to, I would like to, but I want to see if it break further, and then eventually, I want to see it picks back up and trade back above to that. We need to wash out the sellers. We need to wash out the bear before our uptrend can really resume. A nice uptrend can resume, and we want to take out all the sellers, all the bear, and tell them that they're wrong. In that sense, that the market want to go up, and to do that is to trap everybody. That's how it really works. Is to let all the sellers think, okay, market's breaking down, I'm selling. All of a sudden they get hurt. So psychologically, the fear is gone. The greed comes back and says they admit that okay, they got wiped by the market. Let's switch to the other side. Right? Until that happens, a bull trend is harder to really establish because you still have people that is on the other side of the trade. Every time it goes up, sellers want to come in and sell, right? Until they invalidate the sellers that yes, you guys are wrong. The market actually really want to go up, but you got to wipe them out. You got to set a trap, get them all into the trap, and then tell them, hey, this is a trap. You guys are wrong. This is why I say if it move below and everybody's selling and then start ripping up and then break backs up, all the people that was sold down here, they're gonna say, okay, gotta close out all my shorts. Let's go long. So that kind of how the trading psychology, market psychology works. Yeah. So we'll have to see. We're right at this level anyway. Yeah. Okay, that's about it for today. When we're earnings today, and we're going to watch that and see how it goes. And then the important part is the guidance. Always the guidance. Not about beating numbers. It's about what they're going to see going forward. Remember, stock is 6 months ahead. The pricing is what's going to happen 6 months ahead. Okay. At least 6 months ahead. Right? Because of fundamental analysis, that's how it works. You got to give it time to develop. Okay, that's it for this morning. If anything of interest, I'll post up more video intraday. Otherwise, I will talk to everybody next time. Thanks for watching.